All right, what's going on? Welcome to the channel. In this video, I am going to be breaking down the 8 pitfalls that you want to avoid when filling out a business credit card, business loan, business line of credit application. Some of these pitfalls I've been able to gather just by speaking to a lot of our clients inside of the Inside Inner Circle. So I went ahead and chose the most common ones that we continue to see that cause people to get denied or cause them to get weak limits over on the business credit side. And from just watching what people put on applications outside of our program and just gathering that data so that I can go ahead and share that with you guys. So I'm about to take you over to the other side so that we can dive deep and in depth on all 8 of these mistakes, what they are, what to do about them. So if you've been trying to get access to business credit, but you haven't been able to figure out why you keep getting denied, maybe your first business credit card, maybe your first business line of credit, $100,000, $250,000, whatever it is, you might find the answer in this video. And if it's not for you, then consider sharing this with a fellow business owner or entrepreneur that you know will find value in this content. Let's head over to the other side. All right, so you never want to put these things on business credit card applications. Like I said, we have 8 of them. And so I want to warn you of this because this can make or break your business getting access to 100K. This can make or break your business getting access to its first business credit card. This can make or break your business getting access to some capital to get you through the next quarter, especially in uncertain times where we're potentially heading into a recession. Some people say we are, some people say we aren't. That's obviously up for your judgment with your business, what you want to do. So my whole goal with this is to share with you what's going to ultimately hinder your chances of getting access to this funding. So the first things first, and I see this a lot, right? And this is actually one of the first things that whenever I'm speaking to an entrepreneur, especially when they're starting out, they tend to do this, I call mistake. Maybe it's just ignorance. So let's go ahead and kind of break this down. Swapping your EIN with your social security number and vice versa, right? And so your EIN, the way that you want to look at it for the rest of your life, it is an employer identification number, but in just more common terms, what it is, it's essentially your business's social security number. The reason why this is important of why you want to use your EIN on business credit card applications, on vendor accounts, on supplier accounts, if maybe we're dealing more with net 30s or with like fleet cards for gas cards for your business, is because you ultimately want to start building out the same way that you would an individual's social. You want to start building out the credit profile, which in this case is the business credit profile for that business. And the way that you do that is by utilizing the EIN. Now, this is like a sidebar, side note. This is why I'm not the biggest fan. And if you speak to any strong business owner, they'll tell you, hey, we don't have a sole proprietorship set up, right? Look at the big corporations. Mimic what they do. What do they typically have? They have an LLC. They have a holding company. They're established as an S corp, as a C corp. They're incorporated. Rarely will you see someone who's driving some real business revenue as a sole prop. And the reason for that is because even though as a sole prop you can get yourself an EIN, you set up the DBA doing business as, you're not going to have that corporate veil set up between you, the individual, and the business, which is what you ultimately get with the EIN and the social security number. Taking that a step further, with the social security number, there's going to be some times when you're going to have to personally guarantee a product, which means that maybe your business doesn't have enough revenue just yet. Maybe you don't have any collateral that you could put up for maybe some asset-based lending, or if maybe, again, your business is a bit newer and your personal credit is well into the 700s and it has nice history on it and it's built out properly. At that point, you can use that personal credit as leverage to take you into deeper waters in terms of higher amounts of funding with your business. Even though your EIN is maybe less than 2 years old, or even if your EIN is a little bit older than 2 years old, but there's certain products that you may want to personally guarantee to get access to that, you still want to use the social security number, put it where the social goes, and put the EIN where it goes. I know that this may sound common sense to some of us that have maybe been, running a business for some time, but this simple mistake can cost you thousands, if not hundreds of thousands of dollars in business credit, which can ultimately help you scale your business. The second thing that you want to watch out for and never do on a business credit card, business loan, business line of credit application is you never want to put your DNB number, your Dun & Bradstreet number, where your EIN goes. Now, the difference between this and the social is pretty self-explanatory. And if you're not familiar with what a DNB number is, I'll give it to you right here. The DNB number, which is what you get from Dun & Bradstreet, which is the largest business credit bureau, right? So they give you, if you have one business, each business has one business, two business, three businesses, however many businesses you have. Each business should have its own EIN number. Each business should have its own DNB number, because remember, you're building out each credit profile individually. So for some of us with maybe a holding company, and we have 3 LLCs set up under it, or however you're structured, or if you just have 2 different businesses, remember, debt follows the EIN, and how you structure your business credit for the EIN is kind of like one-on-one the same of how you want to do with the DNB number, in terms of letting that build out its own credit profile. And so when you start building out your DNB score, which again with Dun & Bradstreet, it's known as a paydex score, it ranges from 1 to 100. Anything between an 80 to 100, really anything over an 80, it's equivalent to being above a 700 credit score on the personal side, which is you're sitting like in good terms, right? And so the DNB is what you're going to use on certain applications, like with vendor accounts, your Ulines, your Grangers, if you have any suppliers that you typically maybe buy tools from every now and again. Those applications, or really mainly those applications, will have a section where you have, hey, put your Dun & Bradstreet number here, put your EIN here, put your social here. A lot of people like to kind of mix the two up, kind of like how they would with the social. And what ends up happening is that either 1, you can get that automatic denial. 2, it can weaken the limits that you get. And 3, in some instances, it just slows down the entire process altogether, or you just don't get the credit that you desired, right? And it's because they don't know where to report it, because it's not matching what Dun & Bradstreet has in their database. So when these companies or these banks go to look at it, that's not what reflects. And that's why sometimes it'll come off like, hey, this could be a fraud attempt against this business owner. Let's just shut the application down altogether, even though it's you applying. The third thing, this is a bit more high level, but for those of us that have assets, you're thinking maybe real estate, you have land development that you're holding on to, you have equipment, you have business vehicles, you have business trucks in your business's name. Putting assets under one of the businesses that you're looking to secure lines of credit for can get your file flagged, and it can get you denied, right? And so let's slow this down. I'm not going to go too in depth with this, because obviously the way that you structure, that's your business, but it could harm you if you're trying to use that as leverage to maybe fund another business. Here's what I mean by that. We had a client inside of our program where they have 5, or they essentially have now, they have more, now they have about 8, but they had 5 trucks, working trucks. So they had a couple of F-250s, and they had like 16 wheelers, right? And so what they try to do is they try to collateralize one of these 16 wheelers, right, into one of the banks that they were looking to ultimately use that funding for another business. Here was the issue though. One business was logistics, trucking, right? The other business that they had was makeup. And so this couple, they were trying to kind of do 2 things at the same time, right? Which there's nothing wrong with that. They're scaling 2 businesses at the same time. They had the trucking business / transportation, and then they were trying to scale like their makeup brand that they had, where they figured out like an organic remedy, and they were trying to put that out into the marketplace, right? Without going into too much detail. So what they try to do was they try to go to a lender, and they said, hey, we can use the truck that's over here on this side to try to collateralize for, you know, the business over here on this side, since it was a brand new business. It got flagged and it got denied. A lot of lenders like to see separation. Had that, let's say, working truck been placed under on the LLC for the makeup business, then at that point you have a likelier chance, likelihood of getting approved for funding over on this side, on this column, versus it happening over here with the trucking business. And so can you still get funding if you collateralize asset-based lending? 100%. You just want to make sure that when you're setting it up, a lot of lenders like to see it on the column that it belongs to, because if, let's say, business B, makeup business, defaults, at that point, that's ripping into this column over here, which you have a UCC filing not placed over on this truck that we tried to use as collateral. And at that point, it can get messy, which is why lenders don't even like to touch those files. Banks will say, hey, no, unless it's over here on this side, we can't do anything about it. Underselling or overselling personal income. This one right here happens more often than you think, because your natural tendency is, hey, the more income that I put on an application, the higher the chances I have of getting approved. In theory, that is true, right? Because banks, lenders, they tend to lend out in ratios, debt to income ratios, DTI, similar to kind of how they will lend out if you're trying to purchase a home, right? Like your debt servicing ratio, things like that. But what ends up happening is, I'll deal first with the underselling part. If you undersell your income in terms of if you put a number that's maybe smaller than what you're trying to chew for the business credit that you're trying to get, because remember, your business credit card and business lines of credit applications have two sections. They'll have your personal income section as the owner, and then they'll have the business income section as the business revenue, right? So with the personal income side, when you're underselling it, what ends up happening is that you'll put, let's say that you're making $80K a year, but what you don't realize is that, or what some people don't realize, is that it's actually asking for total household income, right? So this could include things like stocks. This could include things like retirement funds. This could include things like pensions. This could include things like alimony, in addition to whatever income you have. Taking that a step further, if maybe your total household income or household is maybe you and a spouse, you and a significant other, and let's say you guys are filing your taxes together, or you guys can show proof that, hey, we are, let's say, filing joint, and let's say combined income, husband is at 100, wife is at 100K, as an example, we're now at $200,000. That's income that you can then put, versus if you were to just put 100K, right? And so it's all about knowing how to properly structure an application when you are trying to get funding for your business. Let's tackle the other side though. When you're overselling your income, so if, let's say, typically banks, once you're above that 250 range for a personal income that you're claiming, and again, this varies by bank, right? Don't take this to the grave because it varies by bank. It also varies the type of information that you put on your application. But if typically when you put over 250 on an application for personal income, they're normally going to start asking for tax returns at that point, because at that point it's higher than the typical baseline or threshold that they feel comfortable with lending. Now, again, some sidebars to this is, if you already have a relationship with the bank or the lender, they could usually sidestep that, or they won't be as strict. If you already have some significant cash sitting in the bank, so we had a client that they already had 30K coming in every month for the last 6 months into their main bank, and when they went to go put that they had 300K in terms of their personal revenue, they never asked for tax documents. And so there's always side steps and exceptions to the rule, which is why I wanted to bring that up to your attention as well. Next one, business revenue can flag an underwrite or auto denials. And again, similar to what I just finished breaking down with the personal credit side, usually once you go over that 425, 450 threshold over on the business side for revenue, that's when you start to see banks and credit unions. And again, this also depends on the size of the credit union and the size of the bank. But typically with grade A banks, once you go over that 450, that's when they typically start to ask you for either bank statements, what type of transactions are these? Are these cash transactions? Or these maybe statements in terms of checks that are being written to you, invoices? How many clients do you have? That's when they start looking into more of that side of it. And then when you are claiming over that 425, 450 threshold, they could also start saying, hey, do you have a P&L, profit and loss statement? Do you have a tax document? Now, I know that a lot of business owners that watch my content and a lot of business owners that are inside of our program, you guys are crushing it, right? So you guys are well above that. We have clients in our side of our program that are well above that 7-figure mark. So you guys have no issues, because I've spoken to you. You have no issues providing that. I'm talking about those of us that we want to kind of bend the application more than what we can bite off, which again, can get into some serious trouble doing it that way, which is why I make these videos, so that you don't have to go through those troubles, so that you don't have to suffer the way that most people do when they're just messing it up. So this can flag an automatic underwrite, and in some instances, or in most instances, if you can't provide that, or if they just see, hey, this number is totally exaggerated, it's just going to be an automatic denial. Now, if you're wondering, well, how would they know if this number is exaggerated? Look, the algorithms are getting really smart, right? And so they can track just off of simple soft pulls, soft credit checks, looking into databases like LexisNexis, for one, looking at the EWS early warning system, your pass. And so if you've had a history of getting your bank accounts closed out because of overdraft, because of late fees, internal late fees, not even necessarily saying late payments that were reported to the credit bureaus, just late fees, kind of like if you were late on a US bank card and they charge you an internal late fee, or even Bank of America does this, they charge you an internal late fee, that stuff gets posted. And remember, with the early warning system, that's governed by over 7 of the biggest banks in the world. And they created that to service over 3,500 banks and credit unions to help mitigate some of their losses, or some of the risk rather, that they get from dealing with, let's say, customers or potential clients that haven't shown strong financials in the past. And so if you're wondering how can they actually know, it's by looking at your personal information and then taking that a step further. If you really wanted to get really technical with it, they can also take a look at the industry average, right? And so this will also vary, right? This is like a geekier data point for those of us that care about numbers. But if, let's say, you are in the middle of Los Angeles, you run a landscaping business, it is your first year in business, we put that our projected revenue is going to be $700K. But in that, let's say, specific zip code or in that area, they ran the numbers according to the NAICS code for the business that you're applying for. And typically, first year in business is like $200K, right? And so at that point, the math isn't adding up. So that's when they'll make pretty much a decision. Hey, is this a business that we want to do a manual underwrite under? Which at that point, let's see some tax stocks, let's see some profit and loss statements, or let's just go ahead and deny the whole thing altogether. At that point, you went through the entire application, you went through the hard inquiry, you went through the applying process, and you were flagged, you were denied. I don't want you to be one of those people. Wrong NAICS codes for your line of work. I'm going to kind of attach this to what I just finished breaking down with the landscaping business because it is important. Let's say you run a landscaping business, but you're using the wrong NAICS code, which, again, you can find NAICS codes. You can Google them. Hey, NAICS code for, let's say, business consulting. NAICS codes for landscaping, NAICS codes for mechanics, right? And the list goes on and on. But what you have to keep in mind is that there's different subcategories of NAICS codes. I've broken this down in previous videos where in real estate, you have subcategories of real estate. So you have real estate developer, that's a different NAICS code. You'll have real estate broker, that's a different NAICS code. You have real estate appraiser, that's a different NAICS code. You have real estate property manager, that's a different NAICS code. Even though it's inside of the same industry, the subcategory can drastically change between it being considered a high risk or a low risk. And so with the NAICS code and picking the wrong NAICS code, one of two things can happen, or two things if we really screw this up. The first one we just finished breaking down, which is essentially the high risk industry, right? Or a high risk category. What that means is you end up potentially looking to a lender like your business is going to either default. It can look like it is a business with a higher liability, meaning the likelihood of it maybe having higher insurance, the likelihood of it having a crazy high cost versus the margins that you may have, or the possibilities of that business getting sued versus maybe another type of business that's considered low risk is a type of business that they may not want to lend to because they feel like they may not get that money back from what they lended over to you as well. And then the second part of that, which we kind of broke down earlier, is the income. Again, if you have an NAICS code that is maybe in a category where the average revenue that business generates in a specific demographic is no higher than 120K, and then you are applying and you're putting, projected business revenue $400,000, that can also get flagged, or you could just get weaker limits altogether versus having picked the right NAICS code. Next, and we're almost done here, but this is so important, applying for the wrong type of business funding. I really want to slow this part down right here because I see business owners do this all the time. They'll see a post on IG, on Instagram. They'll see something on Facebook. They'll see something on TikTok. They'll see someone do a review on a card or on a product like a business line of credit here on YouTube. And then they'll think, oh, that looks good. I should probably try to apply for that and hopefully get $100K. Or I should try to apply for that and hopefully get $35,000. Like whatever it is. What a lot of business owners fail to realize, and again, I don't think that they do this intentionally. I really do believe that most people are coming from a good place, at least when they put out the content. But what most people fail to realize is that when you are trying to apply for funding, you want to look at the landscape kind of like a chess board, right? So you have to be very strategic about how you sequence your funding. And so you can't necessarily just go out and start shotgunning a bunch of applications, because that could be seen as credit phishing. And then what ends up happening is you just get those auto denials. You can't just go out and try to apply for a business line of credit with maybe Chase if we don't have the relationship set up, we don't have the business revenue just yet, we haven't been in business for over 6 months, right? Automatic denials. And then what ends up happening is that also can throw you into their system where they say, hey, this business tried to come, 6 months back when you try to apply, and the last thing you want to do is you don't want to be blacklisted, and you don't want to be put on some of these systems like the EWS early warning system, where now it's really difficult for you to kind of dig yourself out of that. So this is why you want to move accordingly. Maybe you're trying to apply and your credit isn't necessarily clean just yet. Maybe you're trying to apply for a no doc loan when your credit is shot, or you're trying to apply for a full doc loan, like a 2-year tax return type of maybe a loan or a business line of credit, and your business is barely generating 40, 50K just yet, right? So this is why you want to watch all the pieces on the board, which in this case is you want to see how your business is structured. You want to be real with how good your personal credit is and how good your business credit is, because sometimes you'll have lenders and you'll have business banking or business banks that'll take a look at both scores together. And so they'll take a look at, again, that business credit score, and they'll take a look at that personal score, kind of like what happens with the FICO SPSS. And then they do like a merge type of funding for you, right? And so you want to take a look at all the pieces. How's my business structured? Do I have the LLC? Is it a sole prop? Okay, we know that, let's say Bank XYZ only deals with LLCs, or even if it's a credit union within a 50-mile radius of the branch. Okay, this is maybe one that I want to go to in person versus trying to apply online. Okay, well, I know that Chase is more inquiry sensitive, and I know that Chase is more a new account sensitive. So maybe let me put Chase at the top of the list of big banks that I want to establish a relationship with, and maybe I can put credit unions more toward the bottom of the list because they tend to be a bit more lenient. It's all about knowing how to properly structure it and applying for the right funding at the right time. And then last but not least, the legal name of your business doesn't match all of your databases. This one right here kept a client of ours from getting access to $130K in business funding. Everything was right. They had a 750 credit score. They had been in business for 4 years and counting, right? They're still in business. They had some assets that they could have collateralized if they wanted to, which for them, they were going to go more off of just stated income and projected revenue, which they can also back up if they wanted it to, right? Their business was doing pretty well. It was doing over $750,000 a year consecutively over the last 2.5 years. And again, they could have proven it with docs. Here was the issue. When they went to go apply for the business line of credit with their main bank, they ended up getting a red flag. And the red flag was they were denied. So to their surprise, they were thinking, why were we denied? If we had been here when we pretty much opened up the checking accounts on the personal side, which was even a longer relationship, and the business side, which again had been right around that 4-year mark when they had that LLC established. And what they found out was they went through a name change early in their company because they realized that they were in that high risk industry, right? And so they went through the name change, but they hadn't changed it everywhere else. And so it hadn't reported across all the databases. So what ended up happening was if your name, business name, legal name doesn't match the Secretary of State, doesn't match the IRS, with your EIN, that's going to be an automatic denial. Or it could just slow you down, right? The good thing would be if it slows you down because it gives you a chance to say, hey, let me get you the documents that you need. The part that sucks is when you're automatically denied. The other part of that, though, is that when information isn't also, clarified across different industries. They say that the IRS updates businesses, right? So they'll update, let's say, Experian. There's technically update Dun & Bradstreet, Small Business Financial Exchange. I always tell my clients, hey, you may want to take that extra step and just make sure that it's reporting and reflecting across the board. Always pay attention to how your business credit profile looks. Make sure that the business bank account name matches what's on your Secretary of State. Make sure your Secretary of State matches what they have over at Dun & Bradstreet, what they have over at Experian, what they have over at Small Business Financial Exchange. Sometimes you can't necessarily change it by just calling it, especially on the business side, like you can typically do on the personal side. But what you could do is when you open a new account, so let's say if it's a vendor account, make sure that new vendor account has the right information, because that information is going to reflect over on your business credit profiles. And that's how you start pretty much clearing up the information. And so this right here, and it's a bummer because especially if you're structured the right way, everything else, just that small little change, just that little gap in the window that we leave open could get us flagged and could get us denied. So there you have it. Those are the 8 pitfalls that you want to avoid when filling out a business credit card application. If you found value in this content, consider sharing it with someone else, as it does help this content reach a larger audience. And my whole goal with this channel is to help more business owners secure more funding so that we can continue to make more money together. Again, if you found value in this content, consider hitting that like button down below. Don't forget that anytime we're not posting on here, we're posting over on the Insight with Irv channel, which is our podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking me out. Until next time, everyone, I will see you in the next video.